And there you have it. The markets are officially closed on this Wednesday, August 5th. Welcome, investors and traders. I'm AJ Monte with StickyTrades, and we have an action-packed half hour for you, so buckle up. Before we get to the Nod Live news feed, I'd just like to do a quick rundown of the market and showing you what happened since last week's market report. As you can see here from this daily candle chart, I had an upside target right there that I set last Thursday during the weekly market report. We blew through that target, continued higher. And I think that what we're going to see here in the days leading to the end of the week is we're going to see lower prices. Because if you take a look at today's candle, and we just closed pretty much on the lows today, that's known as a shooting star. Now, a shooting star is extremely bearish. This is an example of what a textbook shooting star would look like, where you have a series of green candles in more or less what we call an up leg, and then you have this small body candle with a long shadow on top, with the shadow being at least 1.5 to 2 times the length of the body. And this particular shadow that we're seeing today is closer to 4 times, almost 5 times the length of the body. So 80% of the time when you see that show up, we generally see down moves to follow. So I think there's a very high probability we're going to see the market pull back from here. And then tomorrow afternoon, I'll put out the weekly market report with some new targets, most likely leaning to the downside. Now, going to IWM, you have another red candle here. Now, it's hard to see. Let me see if I can magnify this. We have a diagonal line buried in these candles here, which was my upside target from last Friday. And then we had a secondary target up here that we hit yesterday. And so if you're brand new to the channel or brand new to StickyTrades, understand that when I draw price targets on a chart, I keep them on the chart. I don't get rid of them. So we have an accurate record of how many of these targets have hit, how many are still open, and it's working out very, very well. In fact, we have an official report that we could put out here as of today, August 5th. We have a new world record here at StickyTrades where the max accuracy for target hit came in the Qs at 92.86%. Now, this is the results over a 12-month period ending today. So starting tomorrow, we'll have a set of new targets and we'll see whether or not those targets hit. But I just want you to know that if you know anyone that has a better track record than this, please put them in touch with us. We're not looking to compete with anyone. We're looking to team up with people to get the best forecasting out there to the general public. I mean, think about this. DIA, we had almost an 85% hit rate. 33 targets were set, 28 out of the 33 hit, 5 are still open. IWM, 29 targets hit, 29 established, 25 hits. You got 86% there. But like I said, with the Qs, we only missed on 2 in the last 12 months. And our members have a trade publication that went out today. I can't give the details away because that's a paid membership, but you're going to, I believe, enjoy the downturn in the Qs, which I'm going to get to right now. You see this red candle right here comes right at the highs here. And you see that we have this red candle that, again, is closing very close to the low. As I zoom into the minute-by-minute chart, you're going to see how hard of a hit the NASDAQ took right up into the close. Now, we're waiting to see what's happening with SanDisk because that's going to be another heavyweight that's coming out with earnings today. We'll talk about that in a minute when we bring on Nod. But I do believe that the Qs are going to pull back in a pretty dramatic way to fill this gap down here right around 700. So our members are positioned for that. And down below, again, I don't know how many of you are setting up your charts the way we have them set up, but I'm going to tell you right now, you're missing out on one of the best leading indicators that we are using, and that's the CCI. It's called the Commodity Channel Index. It's right at the bottom. Whenever the CCI goes over this red line or goes over plus 100, it's overbought. But now we have a full-fledged pivot lower on that. So when you see the pivot, it's telling us the sellers are moving in. But when that CCI goes down and crosses back down below the 100 mark, now the sell signal is generated. So stand by for that. And again, if you've never used it before, put it on your chart. I think you're going to be absolutely amazed to see how well that works out. So the Qs, I think, are going to drop closer to that moving average. We'll see how that works out, and stand by for the report that'll come out tomorrow. SPY, look at that big red candle. We gapped up. Now, the upper part of the body, this rectangle on that candle, is where the market opened up. So we gapped up this morning on the S&P, and it continued to trade lower for the entire day that followed the opening. You can see here on the minute-by-minute chart how it just got pummeled right around 10 o'clock, just about a half hour after the market opened. They just leaned on it. And even right now, in the after hours, we're down even more than where we closed here. So the selling pressure is still very much on in the market. So we're putting out an alert, an overbought alert. That's the title of today's headline here. Overbought alert. Watch out for the fall in the market. So very, very high probability that we're going to drop in the days coming here in the next 2 or 3 days. And down below the CCI, look at that. The most overbought it's been all year. Can you see this? Look how high it got all the way up here. It got better than plus 200, almost 250, and then is now pivoting today lower. So that's telling us the selling pressure is coming in very, very strong. And so with the SPY expected to go lower, I'm looking for the VIX to rally. So we hit the downside target on the VIX. Again, 100% of the targets that I put out last week for the main market ETFs and the VIX, 100% of them have hit. And I think we're going to get another high rate of success next week with our targets. So if you're using the targets that I put out here each and every week for option trading, the only thing I have to tell you is I can't tell you when to get in, can't tell you when to get out, but I can tell you it's a good idea to use risk management technique, especially following the 1% rule with any trade that you put on. Because if you're not using a good, strong risk management discipline or applying that to your trading, then it's only a matter of time before the market just takes your money from you. So before we bring on, I just want to talk a little bit more about the VIX here. This is an inverted hammer. An inverted hammer is the opposite of a shooting star. A shooting star is a small body candle with a long shadow above, but a shooting star is found at the end of an up leg. When that same type of a candle is found at the end of a down leg, there's now an 80% chance that the price will rally from here. So a bullish VIX at these levels is bearish for the S&P because it's inversely related to the S&P. So before we get into any other charts, let's bring on Nod from a Nod Live news feed. So he can give you some of the headlines and some pretty strong talking points about what's going on with our economy, particularly the national debt and some of the challenge that consumers are running into right now. Go ahead, Nod. Take it away.
Thanks, AJ. You covered a lot for me. I appreciate it. But I mean, listen, the market's pretty much closed flat today. As we saw a sell-off in SpaceX, it did close down more than 16%. As their capex jumped to $18.4 billion heading into Q2, which was way ahead of expectations. But you know, the big name is SanDisk. They did report earnings. The top line and bottom line did beat, but their guidance, their outlook revenue was 10.3 billion, and they were looking for 10.8. So it's gyrating quite a bit as you and I speak. You know, yesterday we got some ADP, which said that 44,000 jobs were added in July, which was much less than expected. Friday is the big coup de grace from the government with the non-farm payroll number that comes from that. SpaceX is something I do want to talk about really quick because, again, we talked about the down day today. I've got a chart right here. We talked about the lockup. They're going to see 911 million shares, or roughly $100 billion worth of shares held by employees and early investors become available to sell tomorrow, which is a 43% jump, or over 640 of the 640 million shares that came available. So, AJ, what that means is, you know, we could see a flush out, but then we could see a short cover. So for those that are curious about it, there's about 34% of the publicly traded available float sitting short. It's a heavily bearish position, but we know what happens when the market goes too far one way. AJ, there's some correction.
Right.
And I mean, so I don't know where you want to take that, but we know that this is going to be a driver of some of the big tech names. We saw what happened with this headline from Google. One of their big guys is leaving to start another AI company. It's AI.
Yeah, Google got smacked today. Absolutely
Right,
smacked. Yeah.
So
But
we're seeing the headlines continue to drive, but I think they're getting tired, AJ, and I think people are going to start to focus in on individual names rather than just this kind of lazy, broad paintbrush issue, and it's going to be
right.
a stock picker's market.
Right. Well, let's start with SpaceX real quickly, and then I want to go right to SanDisk because they're punishing that in the after hours right now as we speak. You have to understand what Nod said. You have over 30% of the available float is held in a short position. Now, for those who have never shorted stock in your life, understand that the people that took that short position are expecting or have expected the stock to drop, which it has. However, they ultimately have to close that position. You can't keep a short position on forever. So when they close their short position, called short covering, they're going to have to buy back all the shares that they shorted. So what I think they're going to do is they're going to wait for the window, the sell window to open up, let the general public get rid of their shares because, as you know, the general public is almost always wrong. So for those who are selling out of their SpaceX at these levels, those shares that they are selling are going to be gobbled up by those who are short. And I think you're going to see a rally in SpaceX. Now, we're positioned very well in this, both on the up and downside. We have a diagonal calendar put spread that's doing extremely well, but we have a condor on where we have a diagonal calendar call spread added to the put spread. So my upside target on SpaceX is up here. Let me get that little diagonal line to pop up, that data box. That's right around 146.74. So we wanted to get up to around 150 for our position to be in perfect condition, and perfect health. And I think we could see that because if you look at today's candle on SpaceX, it's very close to being an inverted hammer, which we talked about on the VIX. Now, hopping to SanDisk, again, I can't tell people how or what to trade, but I can put out trade publications and educate our members, especially. Now, last week, or the week before last, we put out a bullish position in SanDisk where we sold the credit put spread. We sold the credit put spread way down here, the 1,990 put spread. So we sold a $10 wide put spread for $2. And what I did this morning is I put out a publication letting the members know that the spread that they sold for $2 was trading around 30 cents. It even traded down to 28 cents.
Right.
So anyone who closed that position locked in about 17% profit in just a couple of days or a couple of weeks. Now, you have to understand, I'm not making income claims. I'm not making trade recommendations. Got to be very clear. I don't want to be booted off YouTube and tick off the regulators here. We're just educating people on how to read the charts, how to use the option markets to max out their profits while at the same time eliminating risk. And if you look at SanDisk now in the after hours, I'm very happy that SanDisk put position was closed because it got down as far. Look at that. It got down right around 1,200. So it dropped 150 points in 7 minutes, and that's in the after hours. So we don't know what's going to happen tomorrow. But if you close the position, you're clapping your hands right now, celebrating the fact that you took a 17% profit, while anyone who still has the position might be sweating it out until Friday when that spread expires. So, yeah, very, very interesting market indeed. And it's just trading so technically that it's hard not to get excited about, the technical charts and what's going on here. But Nod, you had some other information about the national debt, and that's just absolutely out of control, and what this means for consumers who are trying to stretch every penny they can in a tough economy right now, especially gas prices still at the high level.
Yeah, I mean, we've talked a lot about shipping, the supply chain, and inflation. I mean, inflation, affordability, housing, and debt remain at the forefront of most everyone that wakes up in the morning. So Americans need about $71,000 to afford a typical U.S. starter home per Redfin. But if you check out this chart real quick. While every American is feeling the pinch, the U.S. government has added $450 billion to their national debt since July 4th, or $15 billion a day. And as John Adams said, there are two ways to enslave a country. One is by a sword, another's by debt. So AJ, at this pace, we're 2 weeks out from the U.S. officially hitting $40 trillion in debt, and which is well beyond anything that's sustainable at this pace. I mean, so where do you think? I mean, I have my thoughts, but where does this take the dollar? Where does this take the precious metals?
Well, as far as I'm concerned, you're not going to have a single politician bringing up the national debt in
No,
any
they should be
campaign
ashamed.
ads. No one in Washington, and I mean no one, it doesn't matter what political party you're affiliated with, no one's going to tackle that question. What are we going to do about our national debt? They're going to
They'll do
avoid it like
nothing.
the plague. No. So the only way you could actually bring it back at least a little bit in control is to inflate your way out of the debt. I mean, that's the only way. So what does that mean? It means they're going to have to devalue the dollar. Now, you got to also understand, this is going to bring me to silver in this conversation as well. If you look at the dollar on the weekly, this is a 3-year weekly chart, you've got the dollar now dropping below the 20-week moving average. And down below here, remember I talked about that CCI, you're going to see that momentum line, that's a zero line being broken. And when that happens, you generally continue lower for 2 to 3 from 3 to 2 to 4 more periods, and this is a weekly chart. So we have another month, I believe, where the dollar is going to be under pressure. But what does that mean for silver? That's good. That's absolutely excellent, actually. Now, while I think silver could pull back just a little bit in the short term, I want to bring everyone's attention to what I posted on X. This is my age. Use hashtag AJSLV trades, and anyone could pull that hashtag up and track all the posts that I put when I put a trade out on SLV. So what I did today, being that we had this little candle gapping up on SLV, I rolled my short calls. I was short the August 21st 59 calls. I rolled those out to September, keeping them at the same strike, and I took in $1.31. Now I have a pretty large position here, so that $1.31 is per share. So for every share that I hold in SLV, I collected $1.31, and each option contract represents 100 shares. So what I'm doing is I'm sitting on a boatload of cash right now. And what that means is I'm using the market's money that I pulled today in cash on the rollout. I'm using the market's money to go buy more SLV once it drops to the lower level. So once we get down closer to the moving average around 52, I'm going to take that cash and I'm going to deploy it right back into SLV to buy more SLV, which means the market gave me free shares. I have free shares thanks to the market giving me the cash. And then what am I going to do against those new shares? I'm going to go sell calls to open, SCO, take in another boatload of cash. And then what am I going to do with that cash? Go right back in and buy more SLV. So for anyone that's working the wheel strategy in SLV, especially, you're looking at this more as a cash machine, an ATM, where the market just generating, it's printing money for you. And then you're taking that money and you're buying shares with the market's money. So it's not coming out of your principal amount. And if you want to learn how to do this, if you're new to Sticky Trades, come on over. We have a 15-day trial with live webinars. We're doing one tonight from 6 to 7. You got time to join us. Just scan that code right under the right side of the screen, right under Nod, where Nod's pointing right there. Take your phone camera, scan that code, and then you're going to be able to come on over for 15 days. There's no strings, no gimmicks, no credit card needed. Just come on by. At the end of 2 weeks, the trial membership just expires. You don't have to call anybody. If you want to come back, that's up to you, but it doesn't expire. And I say, come on over, sample what we have, engage with our members. We have a beautiful community of people who are who are trading the markets actively and doing very well with it, I might add. So yeah, that's our free trial. So Nod, I'm looking at the ticker. The ticker's coming in
Very
to
active.
the chat. You want to pull some questions or ticker symbols, man? We still got about 9.5 minutes to go over some ticker symbols if you like.
Yeah, we've got a bunch. So Stan is wondering, where we stand on the dollar yen. We talked about the carry trade. I mean, do you want to talk about the DXY? You want to talk about the dollar? You talked about it, being devalued. That's the way to go to inflate our way out of this. But what do you think is going to happen?
Well, the Bank of Japan has indicated that they're going to hike rates over there. So that puts the kibosh on the yen carry trade. And we talked about that, I think, the last two market reports we've been bringing up the yen carry trade, where Japanese institutions and others, I might add, are borrowing money at a very cheap rate. In fact, getting paid to borrow money, and then they're parking it in the U.S. markets because they're getting the yield. So they're borrowing money virtually for free, putting in the market, getting a return. But with the Dow, and particularly the Qs, especially, you look at the Qs on a monthly chart, look at this thing. This is out of control, almost vertical price growth. And so as the Bank of Japan starts raising rates, they're not able to borrow money like they used to. And the loans that they originally borrowed are coming due. And what does that mean? They got to sell out of their U.S. equity positions to pay back the loans in full when the term is up, but they can't borrow more and get the same kind of VIG, if you will, or a spread between the borrowed money and the market, especially with the markets overbought. So if the S&P and the general markets over here in the U.S. start to get hit, they go upside down. Now they're losing in a very big way. So now they have to liquidate their equity portfolios here in the U.S., which is only going to put more pressure on the general market. So while we're making money up, down, and sideways, my long-term outlook has been for a while now extremely bearish. But yet there's opportunity in individual stocks. I mean, I see ticker symbols coming in right here. Eric has got some questions as well with SLV. But yeah, this is a great market. Don't be afraid of it. I just say that if you're not using a risk management discipline, the markets could bite you and it could hurt pretty badly, especially for investors who are the buy and hold type. This is a buy and protect market, not a buy and hold forever and ever market.
Well,
so that's yeah. Go ahead.
Speaking of buy and protect, Bill wants to know, where do we go here from on Shopify, SHOP? They reported earnings this morning. What are you seeing in that post earnings reaction from today?
Well, I wouldn't be buying it, that's for sure. Because if you look at what's happened in the past, whether it's a miss or a beat on earnings, they manipulate the markets up, down, and sometimes both up and down in the same hour after the market is closing, after the earnings come out. But if you look to the left, now I would say there's a very high probability that we'll hit the targets here. But I'm just going to draw it out there. I'm not going to put hardline targets because you still got tomorrow for that buy gap up to pan out. But if you look to the left here, I'm going to circle this gap. I don't know if you can see that. If I take my line and basically draw it horizontal from that gap fill, I'm going to use the drawing tool here, and I go right to that low. Look at that. We got that right there. You're pennies away from filling this gap. Now, if you're following me long enough, you'll know my gap fill rules are that 80% of the time gaps fill. Right. So we're pennies away from that happening. However, once the gap fills, there's now an 80% chance it's going to drop or reverse from the original gap fill point. But now what you have down below is a huge gap below the market. So once the upper gap, again, pennies away, fills, that's going to repel the price lower, while the gap below the market is going to draw the price down like a magnet to fill the gap right back down to around 123. So that's the reason I would not be buying that stock. But if I did have it, I can only tell you what I'd be doing. I would be selling in the money calls against this one if I own the stock. I would be selling like the 135 calls in August. And look at this, the 135 calls in August, you could sell those for around $12. So it gives you a $12 cushion if the stock pulls back, plus the premium you're collecting, obviously, in time value. But that's what I would be doing. And then if it continues to drop, I just close the position, take my profit, and move on to another stock. But that's another highly manipulated stock because the institutions hold much of the float. Absolutely. So yeah, I see Scott is asking in the chat, where is AG going? Let's take a look at that. Now, again, if you follow my Twitter page, you'll know that I'm expecting SLV to drop. I tell you why. We weren't sure if we are going to do this, but I'm going to do this. This is for Scott Russell. I'm going to put a downside target on this, and we'll keep track of this one. We'll start with this one tonight on our rapid fire analysis. We'll log this one in. But I think AG is coming right back down to fill the gap right here. It doesn't look like much, but that's going to be around $16.78. So you got almost $1 to the downside, and then as the stock is pulling back, the moving average is moving up and will most likely act as a support level. So I can't really go too much lower than that, but I do think that silver, AG, the miners, and others like FCX are going to drop. We put out a trade publication on FCX today as well. Can't give you all the details, but the miners and the metals look short-term bearish from here. So, Scott, if you hit that downside target, we'll send you some swag from our store. Okay, hope you like it. All right, what else you got, Nod? We got that.
Well, you touched on copper, and copper does seem to be, the nice bridesmaid. It did hit an all-time high recently on the LME. Russ is asking just for a crop dust review from you on copper. You don't need to give away our trade publication, but we're involved. But I mean, what is your macro view on this equity?
Well, I'll use the futures. This is a September futures on copper. Now, it does look like it looks like a bullish candle right here, which it is considered a bullish candle because it's nice and green. However, the volume dropped today, and that's caused these stochastics to start to hinge. When you combine that with the price as it compares to the 20-period moving average, you got a wide divergence from that moving average here. So I think it's only normal to be expected for that to at least pull back to the moving average. So again, it's going to fall in line with my short-term bearish outlook on the metals and the mining companies, especially like FCX, because FCX is more a mining company that's looking more for copper, although they find, whatever they pull out of the ground, they're mainly focused on copper. So I think you're going to see those go lower. Yeah. Now, you see, I told everyone this half hour goes quickly. We only got 2.5 minutes before we got to wrap things up. So we'll only take a question or maybe one more ticker symbol from the audience. We'll call it a wrap. What do you got?
Yeah, we've got Mimi asking for IREN, and it's a name that we've talked about earlier, but I mean, it's quite a mover. I mean, where are you now that it's done that V-shaped move?
All right, this will be an opportunity for me to talk to the Ultimate members. We have a credit call spread. We're short the 39 call. That expires this Friday, by the way. We're short the 39 call. We're long the 42 call. So we want it to drop, and I do think we're going to see a little bit of a drop by Friday, mainly because if you look at today's candle, we have a lower high today, followed by a lower low, and it closed right on the low. Look at the minute-by-minute chart here. You'll see exactly what I'm talking about. Look at that. Closed right on the low and continue to go lower in the after-hour market right now. So I think that's going lower. I'm not about to take any new positions in this one, but I'll be very happy when this one expires, because then we'll take out another and we'll chalk up another winner, because our ultimate, as of now, knock on wood, not an income claim at all, but as of now, 100% of the trade publications that we put out through the Ultimate Service, 100% are successful trades. We didn't have one loser. Pretty amazing, folks. And I give all credit to the charts. And what we're doing here at StickyTrades is just showing people how to use the charts, how to manage risk, how to cut out the noise and focus on what's most important, which is the price action. And so I say, turn on the charts, turn off CNBC, turn on StickyTrades, and come on by for your 15-day free trial, and we'll welcome you with open arms. So Nod, with that, I'm going to call it a wrap. Thank everyone for joining us. Make sure you put your like and your comments down there in the YouTube channel. We really appreciate that because it helps us build our channel. And also, let us know where you're dialing in from. Go back on the recording and go into the comments field. We love to know where people are dialing in from around the world. So, again, thank you for joining us. We'll catch you next time. So long.